great to be speaking to all of you. I've got a few slides here. I'm going to speak for a few minutes, and what I really want to cover is why 2020 is turning out to be a good year for digital assets and crypto, but it's really setting up for 2021 to be a great year. So let's just dive into this. Now, 2020 is a year that I don't think any of us should ever expect to see again in our lifetime. I think it's almost worse than a science fiction movie because we've had a global pandemic that's killed over 1 million people so far and counting. It's the first ever time that the entire global economy essentially went through a coordinated shutdown. I mean, that's unimaginable, but can you imagine policymakers and central banks deciding things are so bad they got to shut down the entire economy and everyone stays at home? The US had an economic contraction that's worse than the Great Depression. So whatever they call the Great Depression, this is a greater depression. And the Federal Reserve introduced a playbook within days. So whatever guidance they had, it completely switched to low for long forever, and even their model for changing rates has now changed. I mean, that's, again, something out of a science fiction movie. And the US government spent $5 trillion in stimulus, which is about 25% of GDP. And as you know, this led to a huge panic in financial markets. So this is the setup, and I think this is the question. How did crypto do in a year that looked like something out of a science fiction movie? And the good news is, crypto did actually incredibly well. Bitcoin is the best performing asset year to date. It's doing better than gold, better than treasuries. So if you said, I want a safe haven in a year that involves something out of a science fiction movie, you have to own crypto. Now, of course, Bitcoin did well, but look at this chart. Bitcoin was outperformed by many other crypto assets and blockchains, including BSV. So that's the key. In a year when you're trying to find safe havens, you want to overweight crypto, but you also want to not only invest in Bitcoin. Now, this is where it's interesting. You know, we've said for some time, in something that's quite controversial, that we think crypto tends to be a risk-on asset. In other words, in years where equity markets do well, crypto does well, and in the years where equities do poorly, crypto should do poorly. And this chart really underscores that. If you look at how the correlation of Bitcoin Core to the S&P 500, you can see in 2020, that's the dark blue line, it's actually risen to 35%, which is one of the highest correlations in many years. And again, it's just a reminder, as much as crypto has really shined in a year of crisis, it is also highly correlated to risk-on assets. Now, another good thing that's happened this year, and I think that's made this a good year, but not a great year yet, is that we've seen signs of broader mainstream acceptance of crypto. For instance, in May 2020, Paul Tudor Jones announced that he's buying Bitcoin Core as a hedge against inflation. In August, we had a public company actually invest $250 million of its reserve capital into Bitcoin Core. And in September, we've had some banks really get the nod to be able to actually hold reserves for stablecoin accounts. Okay, but these are sort of baby steps, and I think the reason 2020 is good but not great is you still need two things to happen. The first is you really need to get true mainstream adoption of crypto through the institutional channel. And crypto is too small today. It's not 10% of liquid assets. Even if you aggregate the entire market cap of all crypto, it's not even 1%. It's 0.1% of all liquid assets in the world. And this is a map. Each of these squares represents about $100 billion, and you can, or 200 billion, sorry. And as you can see, crypto collectively is just a little tiny little dot. It's smaller than gold, it's smaller than art, way smaller than equities or bonds and real estate. So I think until crypto becomes a much larger share of total assets, it's not going to be on the radar for institutions. But that's not a bad thing. Take a look at Tesla. I think it's a case study in how when an asset goes from being a retail asset to institutional, the institutional investor overnight transforms the price or the valuation of an asset. So Tesla has been dead money for 5 years, stuck at around $200. This is pre-split. And as you can see, the minute it became on the radar for Russell 1000 institutional investors, the stock went parabolic. That's the lesson. You can take anything, even a huge mature company, once it becomes an institutional asset, you'll see a huge change in price. Now, one last thing before I turn it over to David is, I think this has been a great year, but I think the industry did not capitalize on some key things. Now think about this. Just in America alone, the majority of Americans were shelter at home. Americans this year expanded their digital life. We estimate that as much as 90% of all economic growth since March has been purely digital. Even US companies pivoted their business to become essentially part of your digital world. I mean, look at Nike and all these other consumer companies. They made a huge pivot this year. And I think that's something the crypto industry didn't capitalize on. This was a year where they could have tried to pivot towards a more mainstream, Americans are living a digital life, and that was a dropped opportunity. But I'm going to stop it here and turn it over to David to continue the discussion.
Thank you, Tom. Thank you, Tom, and CoinGeek. It's great to be here presenting in front of you guys today. Today, I'm going to talk about three things. The first thing I'm going to talk about is Fundstrat, what we do with our research product, and particularly within the crypto industry. The second thing I'll talk about is some of the unique things that we see with Bitcoin SV and a report that we recently did on Bitcoin SV and some of the things that we find very interesting in that. And then the third thing I want to talk about is within that report, Bitcoin SV business use cases of the blockchain. We're going to talk about some of the companies building on Bitcoin SV and what we find interesting from a stance that's a little more broad to the global economy or to the most industries, and kind of thinking about what this actually entails for changing, potentially disrupting some of the current existing business models that are out there, and what the new innovation of the technology is enabling and across a broad swath of use cases in society. So let's just kick it off with Fundstrat. Tom, you probably know Tom, what we do there. Just to give you a quick background on what we do with Fundstrat and our crypto project. I lead our digital asset research business. Consists of three things. We do research for asset-specific companies like Bitcoin SV or networks. We have institutional client base that relies on us for that research. We really try to be the bridge between Wall Street and crypto, and we think that's been very impactful and very powerful. And the third thing is we have a strong retail following who really looks to us for looking to find guidance, to find education in the space. And the report I'm going to discuss today is on Bitcoin SV here, the business use case of the Bitcoin blockchain. And we recently released this just a couple months ago. And it followed a report that we did back in February, which was on the Genesis upgrade, which you may have been following if you are in the Bitcoin ecosystem, and I'm sure you probably are if you're watching this. And we released that back in February, right before the CoinGeek conference in London. It was a great event. We were glad to be there and glad to be back. When we released that, we think it's very important to start here because that's kind of pivotal to where Bitcoin SV is today, because that's where it came from. And I think that was a really monumental turning point for the network and the technology and the way that it's being used. So just to recap, and I'm sure you folks know, but releasing the block size limit, that's key for building the ability for unbounded scalability, which you guys are pursuing now. And what I'll say about that is, from our independent research point of view, we've seen, a number of folks trying to scale and attempting to scale and doing a lot of different things. And obviously there's trade-offs that come with every approach in the ecosystem. We look at a number of different chains and a number of different projects, and we're independent in our research. But one thing that's standing out to me thus far is that, since you guys have done that, since Bitcoin SV and the community has changed this approach to unlimited block size, you have actually come quite far relative to a number of other assets and other approaches. And you guys have a ways to go that you're actually looking to still expand in that vision, which is the FAR bubble, which is what I've been told Bitcoin SV is looking to go for in the future. And I think that that's very exciting. And one thing you also have been able to do, which is very important for the use cases that I'm going to discuss, is the transaction fees have remained low thus far. And we've seen that, and that's been very interesting for enabling some of these use cases. And I feel confident in saying that, and it's very interesting to me because, if I hear what a lot of networks want to do or proposing to do or planning to do, one thing I want to actually know from an independent research point of view, right, is to verify. And when I look at many networks, the thing that I see is the blockchain. I look at the blockchain data, and I view that as effectively the equivalent of company financials. And just as you would go to read a 10K or an investor report with the SEC, I want to look at the blockchain data and know that what's happening there on the network is in fact happening. And when I look at Bitcoin SV, one of the things that's very encouraging to me, based on our research, is I can look at the data and I can see that the block size cap, removing that has really actually been showing that block sizes have been rising. And this chart is in log scale, so maybe it doesn't even understates it, but it's been very material in the growth, and it's shown that the ability to grow block sizes. And what that does is, in the next slide that I'm going to talk about, is we've seen a couple of things. This far, there's two things I want to point out on this chart. The first on the left side is the transaction fees. It's been very low thus far for the most part of since you guys have launched. And I think that that's very important for enabling several use cases. And on the right side is you have seen several periods where not just transaction fees are low, but the actual average transaction value sent are low. And what that means is very useful. You can have effectively micropayments. And that's a very interesting thing, which I'll talk about in a minute, because it changes the payment dynamic and what you can do on the internet with streaming value and what you can do in terms of use cases that were previously not possible with the current payment systems and the payment rails that we have. And that ability to do streaming value opens up a lot of interesting business internet use cases that we'll discuss. So the next thing, just to point out on Bitcoin SV that I find interesting thus far, is you have seen also transaction throughput, meaning large transaction counts rising very dramatically as well, which is very encouraging for at least the use case that Bitcoin SV is looking to pursue, which is scalable transactions. And we've seen that, and that's been very encouraging. And on the right side, you have data transactions on the blockchain. You can see that a lot of data transactions are as well being used. And this stuff is all very important, as I'll talk about in a minute, just to preface. So from that, one thing that I find important, as we're educating clients, we're educating investors across Wall Street, is to help them think about how cryptocurrency isn't just a currency, but it's also a platform technology for enabling a host of business use cases. And I think that sometimes gets lost with folks who maybe are newer and trying to dive into what this is, because you can look at some of these things and you can say, I can move that money, I can send money around with this, but it gets lost what businesses are doing with it. And that was the purpose of this report, was to dive into a few specific segments of the Bitcoin SV ecosystem across a couple of different industries, and kind of give people an understanding about what these people are doing and what they're enabling and what's unique about that and why. And I won't probably have time for all of them, but I'll go through a few here that I find interesting. But what I will say is, one thing I encourage all of you to do who are here watching this and online is to go to our website, fundstrat.com, and you can find this report, which is one we've made public for the crypto community, because we want to help broaden that exposure. And I highly encourage you to check that out, read about all the other companies in here, go to their websites, learn more, watch their presentations here, because they're going to give great discussions, I'm sure, like the one we just saw previously. And I encourage you to look at that and follow us in our research. So just of the ones we're going to discuss, this is just a host of a number that are on the Bitcoin SV blockchain. And I'm sure there's many more emerging, as you'll see here today and as time grows, and that's very exciting. So one of the first ones I want to discuss is a company that maybe is presenting here called EHR Data. What's interesting about EHR Data is, they're using the blockchain to enable reduce fraud and to give people ownership of their medical records data. And one thing that's unique about that is it has a very interesting impact on the healthcare industry, but more broadly, I actually want to talk about what this kind of means in terms of just the enablement of this data, letting consumers take back their data, and what that means for society more broadly in terms of a number of industries. So if you think about the paradigm of the internet today, generally speaking, consumers host their data, and many of the biggest technology companies, as people have, are taking that data, and it's become a very big business. And if you have a new model emerge, right, not just across healthcare, but across many swaths of the internet society, where consumers take back control of their data and own their data, it creates a different business model paradigm shift. And what I'm talking about here specifically is, if you think about advertising, for example, digital advertising, Google, Facebook, this is really supposed to be, $500 billion market across the U.S. and globally, I'm sorry, within the next few years. And it's a very big market. And if you shift the balance on this from, businesses extracting data from consumers to and getting advertising from it, to consumers owning their data, selling that data back to businesses for an amount, you have a really different business model shift that can do a lot of different things to society across the internet. And I think some of the technologies that are built upon the core of this blockchain here, Bitcoin SV, is useful for really being uniquely able to enable that. And I'm just going to skip through a couple of these here. Just to touch on a couple things for each one. MetaStream, this is interesting because IoT, they're putting a number of data sources on the blockchain. And what this is useful for is tracking big data, right? Connecting the physical world and the digital world. And IoT is going to be an $11 trillion market, a very big market. And what I found interesting about Bitcoin SV, unique in this situation, the way you're approaching it is, with the scalability of putting the data on the blockchain, this is something you can't do with probably many other networks unless you're, especially in the public sphere, but you can do in many private enterprise chains. But your scalability allows for large amounts of data to go on that chain. And that's interesting for connecting the physical and digital world. Another one here is BitBoss. They're doing very interesting things to, again, our economy is going digital. You're seeing digital transformation across the entire economy, and especially during COVID. And what they have is they're connecting casinos, the digital side, and they're allowing people to use Bitcoin SV tokens. They're allowing for payments. They have an integrated app. It's built into the blockchain. Very, very interesting, and it's allowed because of some of the more high transaction throughputs, which I find interesting. Another one here, coronavirus. Gaming is a huge industry, as we've seen. It's a very big thing, and as more people move away from sports to esports, to move to online games, you've seen a large growth in that market, very big market. And one thing that's come to us is, we have a lot of companies who are in charge of these games, these matches, and finding transparency in who wins these games, who loses. It's a big deal, especially when you have sports tournaments and there's millions of dollars on the line. And making sure that you have an audible truth on that that's not controlled by one company is very interesting, because even if you have a consortium of these companies, how much trust do you have in the system? And what they do by putting some of the games online, putting some of the moves online, I think that's very interesting, and I think might be something that gamers demand in the future. Marathon browser. So one of the unique things that the Genesis upgrade and the shift towards the MetaNet has focused on is transforming Bitcoin SV from being more of a digital payments engine to also enabling another layer of internet applications. And I think that's something that's possibly lost on many people who look at cryptocurrency and think about crypto as just this payment tool. And I think what's unique is, as I'll talk about in a second, many projects, crypto projects, are looking to reinvent the internet. And you guys are doing it in your own very unique way. And what we're seeing when you store a distributed architecture of nodes across the world, and you have big data held, right, from websites, from things, whether it's different websites, whether it's different media files across a broad swath of this new internet architecture, right, taking it out of centralized cloud providers, putting it on a blockchain architecture, and then you overlay another layer of network on top of that, and then you have effectively the portal to access that. And you can create this different internet architecture that's not housed by Tencent, Alibaba, Google, Google Cloud, AWS, and you can actually change the dynamic of that. Possibly in the future, that could be something very interesting. We're looking to see how that unfolds, what that could mean for the cloud industry, which is already a $400 billion industry and growing very fast. So we think that that's interesting. And back to the advertising model, another interesting advertising thing that we're seeing is, if you think about internet business models today, generally speaking, there's really two types of business models that exist. There's advertising, and there's subscription transaction. And if you think about what a new type of technology can do to potentially change the business landscape on these, is, we've just talked about what could happen with changing advertising to data ownership, and how that could kind of cut through to giving consumers back value, right, instead of paying through the advertisers to the middleman. Another model that we see today is this one, Tonic Pal. It's giving people the ability to do advertising to their friends, but with micropayments. And what this is interesting, because if you look at instead of giving people subscription models, you can take it to a more minute detail. It's an unbundling. People probably remember the unbundling of the cable networks when internet came online, right? You would buy Hulu, you change, these things change. And we could potentially be seeing an unbundling of many subscription models with just the technology of streaming micropayments and what that could enable, as well as a change, again, back from advertisers taking our data and pushing products on us, right, that we may or may not want, but also to this new model of we have our data, we get paid for that data, people pay us to look at these things, to look at different campaigns, and it's a very unique structure for how the internet could evolve, and I'm watching it very closely to see what happens with this and what new business models are invented. And another one that we'll talk about quickly is an API service. Because you can have smart contracts, because you can do streaming micropayments, APIs are a very big industry. If you look at much of some of the very billion-dollar companies today have really just become built on APIs. Twilio, other ones like Plaid, you're seeing an unbundling of the internet stacks and a lot of these internet services that exist. And you're getting really specialization in these companies where companies are just doing APIs and providing those APIs as a service to other companies, and you're building these layers. And this is very unique because it allows you to monetize that API as a developer with streaming micropayments every time someone does a call. And I think that that's very unique for what this could enable in terms of a layering of the internet stack and what different business applications could be built. And in my industry, finance, we've all know that there's been a big push towards really quantitative investment. And I think something unique here that I'm seeing as we think about what could happen with many assets on many blockchains and even beyond just financial assets, right? If you tokenize things, if you tokenize different parts of society, right, you can take big data, you can do different analysis on that, right, across a number of different asset classes, and you can create a lot of efficiencies, and that could be useful for the capital markets. And I think that could be very interesting to see how that unfolds as well. In-chain, obviously the company behind BSV in terms of the many of the development initiatives that happen. You can see here the things that I'm talking about really span across a broad swath of industries, and they help people incorporate that. And I'm looking forward to seeing what types of new internet and innovative crypto blockchain solutions come out of this across a number of industries. And one last thing I want to leave you all with is a speaker who just spoke, Tal. But I find it very interesting because people think about them probably potentially as just a mining company. And as they just talked about, I think it's much more than that the potential could be in the future for many of the crypto networks that we see existing, but BSV in particular as well, which is many of these internet architectures, you can look at these things, and especially the companies that support it in the infrastructure side, almost as a reinventing again of the cloud. And the cloud computing, it's been a very big shift that we've seen these days. And people thought the cloud, people think the cloud will never end. But I think at some point, we could see a change in that dynamic, and you could see a change towards many of these computing architectures that we're building today. And it's just beyond, it's more than just mining, right? It's a reinventing of how many business models could potentially change in the future. And that's something that we're keeping a very close eye on and we're very excited about. And with that, I thank you guys for your time.